credit cards really in the outs? How do we determine credit limit factors? How do you determine if you get approved or not? How is it determined if you're getting business credit cards or personal credit reporting credit cards? There's so many things you should really know to be able to secure the best kind of business credit cards. And I mean the credit cards that have the lowest actual interest rates, the highest limits you can get, and the accounts that really provide you the maximum benefit to be able to grow your business. And that's exactly what we are going to decode today. We're going to talk about everything from the application process of business credit cards and to choosing ones that help you build business credit, to other perks and incentives like 0% rate, to how to actually decipher the different interest rates and fees you'll pay, the business versus personal credit cards, how to know the difference, where they report to, everything you need to know to successfully get the right kind of business credit cards we are going to nail down right now. So we got a lot to dive into. Let's get started. All right, so business credit cards, one of the most powerful ways you can really get money to grow your business, and here's why. Because of all the types of money you can get to grow a business, business credit cards are quite simply the easiest to get. I can't say it any other way. If you're trying to get credit lines, if you're trying to get loans, these require a lot more than business credit cards do. Business credit cards you can get in the early part of a business. They're revolving credit, so you're able to get approved for the actual credit cards and then not pay any interest unless you're actually using them, for example. They're easy to get at any stage of the business, and you're not hurt by getting a multitude of these different credit cards that you can actually get to have a lot of different business credit cards for a lot of different reasons. So what are the things you need to know? How do these credit cards actually work? Well, let's dive in and talk a little bit more. First of all, when you're applying for business credit cards, you should first know where they're actually reporting to. So if you're working with Credit Suite, we tell you where they report to. If you're not working with Credit Suite, it makes good sense to ask the credit issuer where they report. So one of the last credit cards I had for the business that I was interested in was a PNC Bank card. So when I got it, I looked through the application, I looked through the small print, I got an idea of the rates and the APR. The APR is important because the APR takes all of the fees and puts it into one calculation. So you don't want to look at an interest rate that's low and look at fees that are high and then realize that you got a credit card thinking the interest rate was low, but really you're paying more on that card than any other card you have because of these other fees that are assessed. This is where APRs provide a benefit. When I'm going through every part of that application, I'm looking to see if it says anything about the credit bureau they're polling to make the decision. And I'm also looking to see, does it actually tell me who they report to? These are two really important things that if the application anywhere, even in small print, doesn't tell you, you should be asking the actual credit issuer. Call them up and ask them these two questions. Hey, who do you actually use to pull credit from to make your approval decision? I want to know. Will they make the approval decision based on the business credit reporting agencies or is it the consumer reporting agencies? And which bureaus are they looking at? Now, why is this important? Because if you're monitoring your consumer or your commercial credit, you're obviously going to see that you've got better credit on one profile versus another. So if I know that my Experian consumer report is the strongest of the three, and PNC Bank is saying that they look at my Experian personal credit report, that's a positive. That's a plus. I know they're looking at the best bureau that reflects my best history and is obviously typically going to get me the best terms. The other thing I want to know is, where do they report to? Do you report to the consumer reporting agencies or the business credit reporting agencies, or nowhere, or both? This becomes very important as well. If you go to get a Capital One Spark card, they may tell you they report to D&B, but what they might not tell you is that they're also reporting to TransUnion. So you need to know this because we don't want to get credit cards that report to our consumer and commercial credit reporting agencies, because once that happens, it hurts our personal credit scores because 30% of our utilization is based on our 30% of our FICO score is based on our utilization. So we need to know, what bureau are they pulling? Where are they reporting to? And when you're going through an application process, this is one of the first things that you want to know. Now, if you want business credit without a personal guarantee, well, then you need to know you can't give them your social security number and authorize them to be able to do a personal credit check. Okay, nowadays you have to provide your social security number on the application after June of 2018, when the government required that banks that issue credit require that information for identity purposes. So now you have to provide the social. It used to be easy. You didn't have to even provide the social on the application. Now you do, but you need to make sure when you're going through that application, and the application clearly tells you that they're only using your social for verification of identity purposes and nothing else. If they are not clearly articulating that, more than likely, that means that by giving the social, you are providing a personal guarantee and a personal credit check. If you're okay with that, fine, move forward. If you're not okay with that, back out and make sure you're communicating with them by phone to actually make sure they understand that you do not want to provide a personal guarantee or a credit check. You want them to make the approval decision based on your business credit quality alone. Now, obviously, this is a problem if you don't have any business credit established, right? You have to have business credit established in order to get the approval based on your business credit history. But what I'm trying to do is help you avoid providing personal guarantees and credit checks when you absolutely just don't want to. Keep in mind, again, if they're not articulating that they are not doing a credit check or personal guarantee, they more than likely are. You should know this during the application process. Now, how do they determine the type of limit you should get? Well, there's a few things that are very important. First of all, the limits on your existing accounts. If they are using business credit for the approval decision, what's the highest amount of money that you've had issued to you that's reporting on your business credit reports and scores? If you have credit cards on there that have $10,000 and $15,000 limits, well, then more than likely you're going to get this new credit with similar limits to that, $10,000 or $15,000. But if you have credit cards on your business credit reports that only show $2,000 limits as the high, well, then you're probably not going to get high limit on the new card. You're probably going to be around $2,000, $3,000, $4,000, $5,000. So think of it like this. You may see an approval within 20% of your current limit, higher or lower. So if you want to get higher limits, you have to get more accounts on those business credit reports with higher limits, and that's going to help your future limits be even higher. Same thing with consumer credit. If they're using consumer credit for the approval, they're going to somewhat mimic whatever your highest credit limit accounts are. So if the highest credit limit accounts I have are $10,000 on my personal credit report, I can't expect them to give me a $30,000 limit. They're not going to. They're probably going to give me $12K. They may give me $8K. It's going to be somewhere around my highest limit of $10,000, but it's not going to be substantially higher or lower than that amount. Now, the other thing is if you're applying for business credit cards, they might base it on your business revenue or the income you're claiming. Now, sometimes applications ask for your income. Sometimes they ask for your revenue. Sometimes even ask for projected revenue. But again, those things, when they're asking you for income, that income ultimately ties into the approval you're going to get. By the way, exactly the same thing with SBA loans. SBA is making the approval decision and the amount you're going to get approved for based on your revenue and your profits. So if you want to get higher amounts on loans, term loans, SBA loans, you want to be showing higher profit on tax returns. It's directly relating to how much you're actually getting approved for. Back to business credit cards, so my ADD doesn't take us too far off track. The credit limit factors that come into this are mainly the existing limits that you currently have, and also they're really going to be looking at things like your revenue, like your income, whatever question they're asking you about that is. Sometimes they'll ask you revenue, sometimes they'll ask you income, sometimes they'll ask you projected revenue. Whatever's related to income or revenue, that is a factor in how they're determining how much you should get. By the way, want to hack the system, want a shortcut to get even higher approvals? Simple. Add more accounts to your business credit reports. Look, what we found in helping 60,000 plus entrepreneurs through the process of building business credit is the more accounts you add to a business credit report, the higher the recommendation of credit from Dun & Bradstreet, Equifax, and Experian is. That means the more accounts we add to your business credit reports, the more money they're going to recommend to future credit issuers to give you. So we want to get as many accounts on our business credit reports as we can, because that raises the recommendation from the bureaus to the credit issuers of how much we should be issued, and that will increase our approvals as well. So when you get higher approvals, follow those 3 tips. Make sure that you get as high a limit as you can on your existing accounts that are on your reports. Also, make sure that you add as many accounts to your business credit reports as well. That increases the actual recommendation of credit from the bureaus. And make sure that you increase or that you have good revenue, because they're going to look at the information you're entering on the application related to your revenue or income, and that's going to tie into how much you get approved. Okay, now let's look at business versus personal. How are you going to use these cards? Well, if you're only going to use cards for business purposes, you should not be using personal credit and having accounts that report on your personal credit reports. You need to get accounts that report on your business credit reports. Here's why. I already touched upon the fact that 30%, a third of your FICO score, is based on utilization. Think about the math for a second. 35% of your consumer FICO is how you pay your bills. 30% is utilization. The math says that by carrying really high balances, you're hurting your scores almost mathematically as much as paying your bills late. Yes, Overutilizing your credit can be as damaging as paying bills late. So what we don't want to do is get cards that are based on personal credit that report to personal credit reporting agencies and use those to try to fund a business. Look, per SBA, the limits on business credit cards are 10 to 100 times higher than consumer credit. Let me repeat that. They are 10 to 100 times higher than consumer credit limits, business credit limits. So what this means is it means if you get a $5,000 limit personal credit card in the business world, you're going to get 50,000 plus on average. Business credit cards have higher limits because they're designed for us to support our businesses. Consumer credit cards have lower limits because they're designed for us to support our consumer spending habits, not businesses. If you try to push a round peg into a square hole, it doesn't typically work out. Okay, that reminds me of this really funny video I saw on TikTok. I'm staying focused here with the ADD, right? So this is the whole point, is that you want to make sure that you are getting the right card for the right purpose. If you are trying to get money for a business, make sure you're applying for business credit cards. Make sure you're trying to build that business credit profile so you can get approved only based on your business credit profile, not your consumer credit profile. This is going to get you substantially higher limits, and utilization really doesn't impact your business credit scores. There's only like one score from Experian where it does. The rest of the scores don't. So that means we can get high limits and utilize a large amount of those actual limits without damaging our business credit scores. So try to separate personal and business spending. Try to separate business and personal credit cards for their intended purpose. This is going to help you conserve your consumer credit scores while building your business credit. Both of those is just going to help make you more lendable. It's going to help make it easier for you to get loans and credit lines. Now, what are you trying to do here? Are you trying to build business credit, or are you not? Look, there's a lot of credit card stacking companies out there, and we've actually referred our clients to a lot of them. They help a lot of our clients get funding. And it took several of them a long time to realize that our clients cared more about building business credit than 0% rates. They didn't even believe us. So we said, ask our clients when we're sitting over, which is more important, getting 0% or building business credit if they have a choice. And what they realized was that 80% of the clients we were sending over cared more about building business credit than 0% rates. This was mind-blowing to them because they had always led with the main benefit of 0% rates, not even realizing that a lot of people see business credit building as an even better benefit than 0% rates will give you. Of course, we want to get all the incentives that we can potentially get, but you need to know if this credit card helps you build business credit or not. Look, the reality is if you're given a choice between A and B, and A reports to a business credit reporting agency and B doesn't, you always want to choose A. Revenue lending, equipment financing, merchant cash advances, credit cards, a lot of these you have options in the lender or credit issuer you choose. Some lenders and credit issuers will report timely payments to the reporting agencies. Some won't. If I'm given the choice and the two approvals are similar, I always want to come in and choose the one that actually will help me report to the business credit reporting agency and build my business credit. Look, we film a lot of content for Dun & Bradstreet. They're actually ready to drop a lot of it on their social media channels. And part of this is where we're actually answering questions for their audience. And this is a question that oftentimes comes up, right? Is that, hey, doesn't business credit just act? It doesn't automatically happen. No, it doesn't automatically happen. Over 9 out of 10 vendors, 9 out of 10 companies that will give you credit do not report the credit to a business credit reporting agency. It's not easy to do. So you want to make sure that you always choose a lender, a credit issuer that's reporting your on-time payments, not just when you're late, your on-time payments to a business credit reporting agency to help you build business credit. Because the more accounts we add to our business credit reports, the higher approvals we're going to see on loans, credit lines, and business credit cards. And by the way, Mike, what's up? Mike South coming in from St. Louis. Always love it when you're coming in and saying hello. And 770 Adams is in the house as well. Howdy to you, my fine sir. Or ma'am, I can't see the picture, so I'm not sure. If you're just coming in, give me a shout out. I'd love to say hi to you right here on the stream. So make sure, if given a choice, we are choosing credit cards that help us build business credit. because those provide way more benefit than any other incentive a credit card is going to, because the more we add to the credit report for our business, the easier it is for us to get credit financing, more money, and better terms. But that does bring me to the other point of choosing the right business credit card, is that you've got to have the right ones with the most rewards and perks, right? TT Adams says 12,000. Whoop, whoop. I love that. Just got a bill divvy yesterday. Congratulations on your divvy account for 12K. We kill it with divvy. Just to let you guys know, we had a $50,000 divvy account. They just bumped this to a $100,000 divvy account. So I'm a huge fan of divvy, and congratulations on getting started. Use that account, pay it as agreed. And just like we have seen, they'll continue to increase you more and more and more to a point where you're getting like $50,000, $100,000 plus in available credit. So T77T Adams, congratulations on your 12K approval. And again, this is what happens if you're following the advice here. We're giving you real advice that actually has worked for tens of thousands of our clients. So we're able to aggregate all of this information from all these clients we're getting approvals for, and then give you the inside information so you can go out like 77T Adams and start getting $12,000 plus approvals as well. So let's not forget with credit cards, rewards and perks. Rewards and perks are important. If I can get an account that reports to the business credit reporting agency and get 0%, sure, I'm going to do it. Why not? If I'm going to use a credit card and cash out the money and I want to be able to use it for real estate purchases, well, then 0% interest rate's probably more important to me. So what is the purpose of the credit you're going to use? I travel a lot, and I travel and stay in Marriott hotels, and I use American Airlines. That's not everywhere I go, but most of the time, 85% of the time, I'm staying in a Marriott and I'm flying American. So I'm going to get credit cards that help me do what I want to do, right? Meaning that I'm going to have my Marriott Bonvoy card. I'm going to have my American Airlines credit card, right? This is the main credit card that I carry with me everywhere that I go. It's American Airlines because I want to get the points, and then those points accrue, and then it helps me with everything, first class upgrades, amongst many other things. So what are the perks? What are you going to use the cards for? For me, I like travel perks because I travel a lot. I want to be able to get upgraded to first class when I travel. I want to be able to get upgraded to suites with Marriott when I travel. That's important to me. So I'm choosing credit cards that give me those perks. Other credit cards give you like multiple points when you buy gas. Other credit cards give you multiple points when you buy office supplies or come in and potentially buy even groceries as well. So again, what are you using the card for? You want to be able to go and find the cards that give you the most perks, okay? Other ones will let you have, the actual different places, the lounges in the airports. That doesn't matter to you if you don't travel, right? I'm in the lounge all the time. I look like a king. Last time I just traveled with my kids, we went into this back room, into the American Airlines lounge, and my son looked at me and goes, "Dad, are we going to get in trouble? Are we even supposed to be here?" I said, "Trust me." We went up to this elevator. We walked in. We're overlooking the actual runway. There's all this food and drink. They thought I was the coolest dad ever for that moment, right? So again, that's important to me because I travel all the time. So you have to decide groceries. Is it office supplies? Is it hotels? Is it airlines? Is it fuel for your vehicle? What is it you're buying most? And get the cards that focus on those perks. Look, some of these perks will give you 2 to 5 points for every dollar you spend in certain areas. This is also the reason you never want to use one credit card for everything. You want to get multiple credit cards that report to the reporting agencies and use them all. It shows lenders and credit issuers that a lot of people are giving you credit, that you're using all the credit that you're given. And these credit cards have different benefits for different reasons, right? Meaning that I'm going to use one credit card that gives me 5 times points on fuel if I'm driving a lot. I'm going to use that card a lot because I know that I need those 5 times points on fuel. Every time I'm going to fuel up my vehicle, I want to use that card. But if this one gives me 3 times points on airline travel, well, I'm going to use this to book airline travel and this one to be able to actually pay for fuel. So you don't ever want to use one credit card. We tend to do this as business owners. We just want what's easy. We just want to default to what's simple. It's the nemesis in the business credit world. The best thing you could ever do is have 50 credit cards plus. You don't want to have like 3 or 5 in the consumer credit space. This is where we get conditioned. Look, part of your credit score and on your FICO score is your credit mix. And that credit mix, like 10% of your score is your credit mix. And that's like, you don't want to have more than 1 or 2 mortgages. You don't want to have more than 3 major credit cards. That doesn't apply in the business world. In the business world, it's better for us when we have more credit cards. We want to get all the freaking credit cards we can get. And the only way we're going to get them is if we're using them. Because if I get 10 cards and only use one, well, then the other 9 don't help my history. The bureaus actually show the recent credit I've used on that credit card. If I'm not using any money on that credit card, well, then other credit card issuers aren't going to want to give me credit. But if I have 10 credit cards and I spent 2K on this one this month and 1K on this one and 4K on this one, well, all that shows on my history. Now, other credit issuers want to give me more credit because they see that I'm actually utilizing the credit that I'm getting. And by the way, we have a JO in the house. Hey, Coach Ty, Don Cleaner LLC from Providence, Rhode Island in the building. Stay blessed. Thanks for coming in and saying hello. And 77 T Adam says, what's a good gas card? Well, depends on where you get fuel. I like Wawa because I'm a Wawa guy. I like Wawa gas stations. Okay. My son just told me he loves racetracks. So he's a racetrack guy. He just got his license a week ago and he already has a preference of gas stations, right? Citgo, Sunoco. There's gas cards for every one of those. So my advice to you, 770 Adams, is choose whichever one works for you based on where you typically get gas. For me, I'm a Wawa guy, so I'm going to get the Wawa cards, okay? So any of these can work. Those Wex Fleet. Wex Fleet has a great card you can use anywhere, or you want to focus on the actual station that you're getting gas, so hopefully that helps you. So we want to focus on the rewards and perks that we're going to use the most. The most important ones is we want 0% intro rates for 18 months if we can get them. And the second is whatever it is that we're using that to be able to buy the most or we care about the most. In my example, it's travel. So I'm getting credit cards to give me the most points and perks on travel. Next, we've got to look at interest and fees. We have to look at these things combined through an APR. Yes, we want to look at the interest rate. And yes, we want to look at the fees. But the APR combines everything and just gives us a side-by-side comparison. If I'm comparing 3 credit cards, I can look at the APR and know which is the better deal for me. I don't have to say, well, this one's 7% interest and has a $100 fee, and this one's a 12% interest with a $500 fee. Which is better? Well, comparing APRs give us an apple-to-apple comparison so we can easily see the accounts that are better for us. So make sure that you pay attention to the interest rate. Make sure that you pay attention to the fees. Look at annual fees, foreign transaction fees, late fees. Look at all those things depending on how you're actually going to use the card. I'm not afraid to pay $500 for an annual fee to Amex. I'm not afraid to, but I'm not afraid because the perks way outweigh that cost. If the perk is that I get to use the American Airlines lounge and I never fly and I'm not going to use the lounge, I probably don't want to spend the $500. So when you're paying higher annual fees, don't worry about paying them where you don't take that card. It's just, are the perks and benefits you're going to get worth it? Okay, based on whatever those perks and benefits are. So make sure you keep an eye on the interest rates. Make sure you keep an eye on the fees. Make sure you keep an eye on the APRs as well. And then as a result of all of that, you have a side-by-side comparison of the right ones to actually get for your business. All right, so let's do a quick recap. Okay, here is how you actually need to choose the best business credit cards based on how business credit cards work. Application process. We need to make sure that we know, do these cards report to the consumer or commercial reporting agency, and which bureau are they looking at, and which credit are they using to make the determination? Are they pulling my business credit to make the approval decision or my consumer credit to make the decision? I need to know. Are they reporting on my business credit, my personal credit, both or neither? I need to know. I want accounts that report to the business credit reporting agencies primarily because I can utilize those accounts without hurting my personal credit score. And I want to get those because by building my business credit, it just helps me get more money through lenders and credit issuers. Next, I want to know what my credit limit's going to be. I want to get the highest credit limit. So we want to do these 3 things. One, we want to build our business credit. The more accounts we add to a business credit report, the higher the approval amounts are going to be because the bureaus are recommending the credit issuers issue us more money the more accounts we're adding to our business credit reports. Secondly, we want to make sure that we get as high limits on our individual accounts as we can. One way we can do this is to utilize all the business credit cards that we're actually getting. This will get us higher and higher and higher limits. And again, credit cards tend to mimic the limits that we actually have on the consumer and the commercial side. So the higher our limits are, the higher the future limits will be. Next, whatever they're asking, revenue, income, projected revenue, whatever income revenue question they're asking, that will also tie in to the amount of money we actually get approved for. How are you using the credit card? If you're using it for business purposes, do not get credit cards that report on your consumer credit reports. It will destroy your consumer credit. If I'm using business credit cards if I'm using this for business purposes, I want real business credit cards that report to the business credit reporting agencies. This way I can utilize these cards without hurting my consumer credit scores. So you need to make sure you know how you're going to use the card. And if it's for personal, well, then get a personal credit card. If it's for business, use a business credit card. Don't use personal credit cards for business purposes. It creates this financial trap where you're actually hurting your personal credit scores and not able to use them for other purposes you want to use them. Make sure you're getting any cards you can that help you build business credit. Anything that reports on the business credit reporting agencies we want to avoid the ones that report to consumer credit reporting agencies. We want to know about the rewards and perks based on what's important for you and how you're going to use the card. If you're a trucker, then you want credit cards that give you the most cashback points on fuel, for example. If you're like me and you travel all the time, what airline do you travel with? Which hotel do you travel with? You want perks that actually give you more points, 2, 3, 4, 5 points on every dollar you spend in those worlds. If you're a real estate investor looking to come in and be able to liquidate the card and use it for real estate transactions, well, then we want something that gives us a 0% rate. Understand what the rewards and perks are important to you and choose the right cards accordingly. And we've got to make sure that we pay attention to the interest and fees. It's oftentimes confusing. So let's just look at APRs and compare the APR one to the other. That's going to help us get the best gauge of the overall points and interest that are actually charged to us. And there you have it. That is how business credit cards work and how you can use how they work to be able to find the right cards for your business. Thanks for coming in. 770 Adam says, Experian business is a hard one. Still trying to figure out how to raise it. It's just a matter of getting more accounts that actually report to your Experian report and paying those accounts on time or early. Look, if you ever want to raise your score, the key is twofold. Get accounts that report to that reporting agency and pay those bills as soon as you possibly can. Use the credit, pay it as early as you can. Those two things are going to help you, 770 Adams, to get your Experian scores up. No, sorry, Equifax are one. Yes, Equifax is a hard one. Not a lot of people report to Equifax. So if you ever find credit issuers that report to your Equifax business credit reporting agency, you want to get that credit. It's the hardest one to build because a lot of credit issuers don't report to them. And if you want help along the way, you can get in touch with us here at Credit Suite. We will give you a free assessment of your D&B credit report and get you a free Dun & Bradstreet credit report and score at zero cost. We do this because we are teamed up with Dun & Bradstreet. We have access to like 25,000 free business credit reports from them a year. And so we give it to anybody that actually wants an assessment of their D&B report and score. It's yours. It's 100% free. All you have to do is go to this link we just dropped in the chat, creditsuite.com/consult. That's creditsuite.com/consult. We will pull your D&B report score. We will review it with you. We will give you tips and tactics to improve it. We will give you a copy of the D&B report score, and you will leave with your report, your score, and a strategy, a blueprint of what to do to successfully build your business credit. Thank you very much for tuning in. There you have it. That is how you can actually know the right business credit cards for you. It's how business credit cards work and how you can find the right one for your business. If you got value from the training, smash the like button and subscribe. And I look forward to seeing you on our next training where we talk about more cool ways to get the money you need to start and grow your business.